Welcome back. It is time for the Word on Wall Street. Top investors watching your money. Joining me right now is Banrion Capital Management CEO Shana Sissel. And with us all morning this morning is Mark Tepper. Shana, thanks for joining the conversation. Good to see you. We're looking at a market this morning that is trading higher. Futures indicating a gain at the start of trading this morning as we await more third quarter earnings this week. We've got media companies and streaming companies taking center stage with Warner Brothers, Discovery, and Disney coming out on Wednesday. And then Uber and Lyft also out this week. Big tech is also on deck. Apple, Alphabet, Meta, Tesla say that their fourth quarter sales outlooks are in doubt after reporting their quarterly numbers last week, Shana. A lot of people are wondering if the growth levels can sustain of big tech. How would you assess the earnings period so far?
Well, with more than half of the S&P 500 companies reporting, earnings have actually been quite resilient, but you have seen an impact on growth, particularly in the tech companies and the multinational companies that have China exposure. Those companies have had some pressure on earnings as a result of the slowdown in China and some of the regulatory and trade issues as it pertains to China. So that's worth watching. What I have found most interesting is despite the resilient earnings, the overall guidance has been broadly negative. So CEOs are starting to feel the pressure. They're starting to see growth slow down, and that's worth noting. I think that that's something we should continue to listen for as we get the rest of the earnings of the S&P 500.
Yeah, it's a good point that you make. Did you see the Asian markets overnight? Korea is going to start banning short selling of stocks. So here's what happened in Korea. The index there was up 5% in South Korea. Would you expect a rally in stocks by year end?
I don't necessarily expect a rally in stocks year end. I'm not as bullish as a lot of other people. I think that higher interest rates, higher inflation, slowing growth is not a recipe for a market rebound, but I don't see a huge amount of downside necessarily. What I think is going to be the case is there's going to be quite a bit of volatility, and it'll be interesting to see how those inflation numbers play out. If we start to see inflation slow down considerably, not just here but globally, maybe that would change my tune, but I don't foresee that happening. So to me, I just expect volatility through year end.
Yeah, I mean, Mark, we've been watching this economy slow down, and inflation, while it's off of the highs of the year, remains elevated with all the essentials still problematic. I'm talking about food and fuel and rent, shelter. We got the October jobs report coming in lower than expected on Friday. 150,000 jobs added to the economy last month. The unemployment rate ticked up to 3.9%. And the Labor Department also reported that nearly 8.4 million Americans have multiple jobs. They've got 2 jobs, 3 jobs. Nearly 6% of women said that they've doubled up on employment, Mark. That's not a good sign. I mean, it's nice to see people having access to multiple incomes, but you don't want to see people have to be forced to take on a second and third job.
Correct. They're not doing it for the fun of it. They're not doing it so they can add more money to their 401k. They're doing it just so they can make ends meet. And there was a saying from Steve Harvey maybe like 5 years ago. He said, everyone should fly first class one time, because once you do it, you'll never want to go back to coach. And you'll do whatever it takes to work hard and incentivize yourself to produce more for yourself and your family so that you can fly first class in the future. And I think that's a lot of what we see happening right now is you have consumers who got a ton of stimmy checks a few years ago and they ratcheted up their lifestyle. That becomes addictive. It becomes very difficult then when you no longer have that stimulus to ratchet down. So what consumers are doing right now is they're subsidizing that lifestyle spending by spending on credit cards and obviously by holding multiple jobs. Now, you already mentioned that, 150,000 jobs was not a good report. But when you look under the surface, this thing was an absolute disaster. So, look, Bidenomics claims that since April of this year, we've added 1.234 million jobs. Yeah. However, there's only 191 more people in the workforce today that are actually employed. So how do we add that many jobs? And as you kind of go through, you look at the 150,000 supposed jobs we gained. 1/3 were government jobs. And we know that government employees, they they don't economically produce anything. They're a tax on taxpayers. The other 2/3 were health and education, of which 90% of those were low-paying healthcare jobs. So the quality of the jobs that we're supposedly adding, not good at all. And
well, that's right.
Yeah, and although we added 150,000 jobs last month, total number of employed people down by 348,000. So look, this is a constant we've seen out of the Biden administration. They continue to goose the numbers, and then they actually revise them lower later on. They revised the last 2 months down by 100,000 when no one's paying attention.
Well, let's not forget we lost all of those jobs during COVID. And many of the jobs that the Biden administration is trying to take credit for are the jobs that came back that were cut during COVID. So it's very misleading to say that he created all of these jobs when we just came off of the pandemic and lost all of those jobs.
It's a big mirage. Yeah, I mean, that's exactly what they're doing. They want everyone to think they've added 14 million jobs or whatever that egregious number is that they're giving themselves attaboys over. But yeah, I mean, look, this economy, I don't think anyone can really say that we are in a better place economically than we were 3-4 years ago. I mean, inflation is still incredibly high. Maria, that's another thing he loves doing. Inflation's down by 50% over the last year.
Right.
It's still high. Like, what are you talking about? You don't get to take a victory lap for that.
Yeah, well, that's right. And I guess, one of the issues when we look at the retail backdrop, Shana, is that, I don't know, are retailers reporting earnings that actually include demand and volume, or are they reporting increases because of inflation, because they raised prices? That's always a question when we talk about the retail segment reporting.
Absolutely. And the thing that I find most interesting is that consumer sentiment surveys are largely negative. So the consumer is not feeling overly positive, but that, as Mark pointed out, they're so used to spending that the consumer actual behavior, the actual consumer behavior in sales and retail sales have been better than expected because they continue to spend. And we're seeing increased use of credit cards. As Mark pointed out, as you pointed out, people taking second jobs to maintain lifestyles because inflation is so high. This is just overly concerning because it's not sustainable. And as Mark pointed out, and I think, from a standpoint of employment, there's less people in the workforce. So you can't take a victory lap for increased employment when, the unemployment rate has actually gone up and there's less people actually working.
All right. We'll keep a watch on all of that. Shana, thanks for joining the conversation. We will see you soon. Thank you so much. Shana Sissel. Mark, you're with us all morning, and we appreciate that. We're going to take a short break and come right back. Stay with us.